Hi, this is Charles Kelly. How you doing? Good to see you today. I'm sorry to talk about the weather again, but it's blazing hot today, and then the rain come. One time in my car, it was measuring 44 degrees on my car thermometer. Then there was a thunderstorm, and it went down to 27 in like a few minutes. So we've got a bit of cooler weather today, so that's good. Now, I've always wanted to be one of those news readers that come on the news and said, "It's official. The economy is well." It's official now. The economy is not, but it's in recession. And this is because, although we all know we're in recession, we now have two consecutive quarters of negative growth, and where the economy is shrinking. Therefore, that's the official time when it sort of comes into what we call recession. And it actually shrunk in from April to June by 20%, which puts us in almost at the worst country in Europe, apart from Spain. Certainly worse than America, which only shrank by about 10%, and it did bounce back again in June. So that was a bit of good news. It grew by 8.7% as shops reopened, as hotels reopened, and this sort of thing. But a 20% drop is what the Chancellor Rishi Sunak said is unprecedented in our history. So it is bad, and the number of people losing their jobs is they talk about figures. I hear different figures from different organisations, but up to 750,000 we could be talking about. The number of people who in work in the UK fell just in the last quarter by nearly 250,000, and we're seeing through these figures that the economy is slowing further as we see more benefit claimants coming online. Over a number of benefit claimants rose by a million. And it wasn't at the end of last year we had 1 million people unemployed and we're in record numbers of employment, and now we've got another million just like that. We're nearly up to 3 million now, which gets us back to those bad recessions of the 80s. So it is not looking good, and more companies are planning on further redundancies. Big companies. I heard of Royal Bank of Scotland, RBS, which runs all the NatWest branches. They're announcing. Well, they said 500 today, but I understand it could be thousands, as they said customer needs are changing. In other words, we're shutting down branches because customer needs are changing. Every time you walk in there, the staff are saying, "Go online, do this, we'll show you how to do this." It's like they're really trying hard to get rid of their branches and stop talking to people. I just don't understand why they want to put everyone out there in the cloud, and that means that bank would just be like everybody else. It would just be like a challenger bank. I can't understand why they want to close down so many branches, and also the fact that they because we've been pushed into a situation where we're having to use the banks for everything, that the bank should be there as a service. It should be there to serve especially these rural communities, but it looks like we've been pushed into getting out of cash altogether. And in my lifetime, my parents didn't use banks. They got paid in cash, they spent in cash, they paid their bills in cash. Even their mortgage, they went to the building site and paid it over the counter. And my mother used to like it that way. She could see in the book as it was written in. If you save money in a savings account, we had savings accounts. It was written in by hand in a book, and that was your record. And in fact, when one of the mortgage companies she was dealing with disputed her mortgage payments and balance, it was the book that saved her, because she was able to go and say, "No, I paid this, this, and this," and then they said, "Oh yes, we found it." So that book helped. And for years they just never had a bank account. They had savings accounts. I was marched down when I was 8 or 9 to open up a post office savings account. That was one of those ones where they wrote it in a book, and the post office became the National Savings, which now offer the best rates you can find anywhere, I think, for guaranteed bank rates. And but they got by without that. And as I said, everybody was paid in cash. If you look back at some of the old films and TV series from the 70s, the big crime was a wages snatch. But there's a wages snatch on, where they go and grab the wages van on the way to the factory gate and take all the cash. But that doesn't happen now, does it? Because everyone is paid through the bank now. Even benefits claimants and housing benefits paid through into people's banks. And now it looks like a lot of businesses will no longer want to accept cash because they say, oh, it's got coronavirus. Well, I don't believe that. But there's something nice about having cash in your pocket, in your wallet. When you go abroad, you still need cash in a lot of countries that don't like credit cards. And it's just nice to have cash sitting there. You feel like it's yours, whereas the numbers on a bank or on a screen doesn't feel like it's yours. And in fact, there's £24 billion worth of £10 notes, £20 and £5 notes that are kept. They're out of circulation. People have hung on to them. I don't know why, because some of these notes eventually go out of circulation. They have to keep changing the notes just to combat fraudsters who forge them. So some of these notes have actually gone out of circulation. You have to go to the Bank of England, I think, to change them. But still, people seem to like cash. Now, the price of gold has gone up beyond 2,000, which means that a lot of people don't trust the system. They don't trust shares and they don't trust cash. So they're putting the money into gold because they feel that gold holds its value. And the Chinese love gold as well. In China, very little gold actually leaves China. They buy up a lot of gold. It's considered, apart from the jewelry factor and the nice thing to have, it's something that's considered to hold its value over years and centuries, unlike paper money, which generally is devalued. And with paper money being printed at an alarming rate, trillions of dollars and pounds have been printed of paper money. That means that with the more money in circulation, obviously the value of the pound in your pocket and the dollar in your pocket is diminished because there's more money around, there's more money in circulation. And certainly, if you look back in your lifetime, you'll see that, if you had a £10 or a £20 or a £50 note, that what that bought when you were 20 years ago, when you were a child, is not the same as it buys now. But in theory, if you'd use that money to buy a gold coin of some description, then that gold coin should have the same value as it does today as it did in those days. Whether that's true or not depends on when you bought the gold, what you paid for the gold. It doesn't mean that a gold ring, which is jewellery and has manufacturing costs, necessarily holds its value, but gold coins generally do. But sometimes gold goes down. You have to have a warning with this that, people might be panicking at the moment to buy gold and it goes above 2,000, it might come down. And I see a lot of experts on the internet saying, gold is going to go to $10,000. And then you sort of look at who these people are, and in fact, they work for a company, guess what? Selling gold, a gold bullion company, and they seem to be talking up the price of gold. Silver's another one. Silver's, the poor relation of gold, but they say that silver is going up quite fast. I bought some silver about a year ago, and according to the records online, silver went up by 52% in price, and yet the price that I could sell that gold back to the company I bought it from, one of these bullion direct companies, was actually less than I paid for it. How do you work that out? I'll say it again. I bought some silver, and today, if I went back to them, they would give me less than I paid for it, and yet the price of silver has gone up by 52%. So that means that there's a lot of profit there, there's a lot of margin, markup, and there's manufacturing cost. So if you're going to buy metals and you want, say, a coin, because gold is 70 times the value, or roughly, of silver, and costs the same amount to manufacture, you might as well have a gold coin if you just want to hang on to a coin. It could be a 1 ounce coin, which would cost you £1,400-1,500. It could be a sovereign coin, which is a smaller amount, not quite, I can't remember what the exact weight is, but you can buy smaller denominations of coins. But obviously, the smaller you buy, then the less profit there is, or the more markup there is, because there's manufacturing costs on a smaller value of coin. But I'm not suggesting you go out and buy gold, but it's not a bad thing to hold. But it's not guaranteed that it always goes up, and it fluctuates quite a lot. What else do you put your money into? If you put your money into shares, I think shares are overvalued. I think bonds, if you put your money into bonds, the interest rates you get on them are so low that it's not worth it. Some bonds are negative rates. You have to pay the government to hold your bonds. And some accounts are paying so little now that it's not worth. National savings is one you could look at. There's some good rates paid on national savings. This used to be the Post Office Savings Bank. They're now National Savings. And this is because the government wants to raise money. So they're paying higher rates so that the public go in there and buy these savings accounts or bonds. And you can get. I did a session on this about a week ago. So have a look on my Facebook page, Money Tips Daily Community, or on moneytipsdaily.com, and you can see the episode. But if you want something that's just safe and secure, then that's a good place to have it, because the government is not going to go under. They can always pay out this money. But that's more of a savings account rather than investment. As for investments, I think I'm happy to sit in cash for a while, even though in the long term the cash is devalued. But I'm happy to sit in cash and wait for the stock market to go down, which I think it will again, and the property market to go down, which I think it will again. Now you might say, hold on a second, there's already a boom in property at the moment. Properties are booming after the lockdown. Well, yes, that's true, but I think properties are booming, A, because of the pent-up demand, B, because of the stamp duty cut by Rishi Sunak, the Chancellor. He's halved the stamp duty more or less until March next year, the stamp duty holiday as they call it. And that's another reason why people say, we might as well go out and buy now. It could save us £5,000-10,000 in this obscene tax called stamp duty, which is the rip-off of the century. And that's the B. But the C is that there's not many properties on the market. A lot of people are holding back from selling because they perhaps think they won't get a good price. So there is a bit of a shortage of property. And that's why I think this little mini boom could be short-lived. And another reason I think that is because when this furlough scheme comes to an end in the autumn and starts being phased out, and employers are left to say, well, look, we can't leave people sitting at home now, so we've either got to put up or shut up. We've either got to take them back in-house and pay them, or we let them go. And I think a lot of employers will decide the latter, to let them go, because things are changing. The ways of working are changing. I don't think they're going back again. I think that the coronavirus epidemic has brought in a change 2, 3, 4 years faster than it would have happened otherwise. We see big offices not occupied now. They're sending people back to work at home. They've suddenly found the technology very quickly to allow people to work from home. A lot of people prefer to work from home. They don't want to go on the train into work. Not everybody. Some people like working and going to work and meeting people and the social aspect of it. But I think things have changed for the longer term, and I think there'll be less employment opportunities, less jobs around for a long time to come. The government said they will spend money on generating new jobs, but they can only do that with the help of employers. And I'll give you an example. If all the city centres have less people in them because less people are going into the city centres to work, what's going to happen? All those people that went in the city centre, like if you go into the City of London, at lunchtime it's teeming with people going into cafes and bars and restaurants and shops. They're going out doing a bit of lunchtime shopping. The city now is like the West End. There's so many little shops there for people to, and they built shopping malls in the City of London, in the financial district, a few hundred yards from the Bank of England. And if 10 or 20% of those workers are now put out to work at home, that's going to be a dramatic drop in business for those shops and offices, not offices, but shops and other premises like restaurants and cafes and coffee bars that feed off of those people that go into work. If you go in the suburbs, usually at lunchtime it's pretty quiet. There's a few people milling about, a few mums, but now that that could change. You could have more people milling around in the suburb, but it's not the same as it's been at work. Because if you're at home, you can make a coffee at home. You don't need to go out to Starbucks. But when you're at work, you want to go out to Starbucks. You want that social aspect of going into Starbucks. Let's meet at Starbucks. Let's meet at Pret a Manger. Let's go for coffee. Let's go for lunch. If that stops, and we're seeing evidence on the news every day that many businesses and pubs, for instance, pubs in particular, are really suffering from the lack of trade. So that's hundreds of thousands of jobs there. Travel industry is another one. I think that will take a long time to recover, for people to be confident about getting on a metal box with 300 other people sat like this, three to a row, I'm not going to do it this year. I'm not going to do it until I'm really confident that things are okay. So that's why I think if jobs go down, people are not going to be going out and buying so many properties. That's what I think will happen. However, in the long run, I think property is still a good investment. I think in the long term, properties will still be a good investment because there's always a need for property. People need to live somewhere, and there's not enough places for people to live as a whole in the country. There's still a shortage of property, and in fact, the government is introducing new legislation to allow new homes to be built faster. At the moment, it's taken 5 to 10 years, and that is ridiculous. And I've sat on a planning committee in a council. I was a councillor, so I know how these things work. It just takes so long. It's honestly, they raise a query, it goes back to the developer, they they answer it, and it goes to the back of the queue, and it's months before it's answered again. And that's before they've had the surveys for bats and newts and this sort of thing. And that's before they've had different consultations. And on the big development, it's not just like applying for planning permission for an extension. There's a lot of pre-work that goes into these things, and it does take 5 to 10 years. The planning officers told me, said, well, this development, of course, won't be built for another 10 years. And these are like new developments for thousands of people that will need housing just in that borough. So that's what's going to happen. But I think they say they need to build 200,000 homes a year. It's not happening. It won't be happening for several years. So there will still be a demand for property, especially as the economy eventually does pick up. So that's why I like property. Even if it's not going up in value all the time, as we've come to expect, at least you're getting an income from it. You're getting rent. Just like a share. If you buy a share in a good company, if you researched it and you know that company's good and you can buy it at the right price, maybe if the market, during a market crash, and you've researched that company, then the price of the share is almost immaterial. You'll still get dividends from those companies. You'll get years and years of dividends, as the likes of, say, Warren Buffett has done. He's bought good shares in steady companies. Your Coca-Colas, your McDonald's and companies like that, steady companies, rail freight companies, these evergreen companies, and they get dividends every year, and the value over time goes up. So that's why I like property. And if you're interested in property but you want to get into it but you don't feel you have enough money to do so, there's actually a seminar. It may have started already tonight, and I think there might be Sunday, Monday, Tuesday. There might be one on tomorrow, but certainly maybe it's the last night. So just check that out at the bottom of the page here. I think it is the last night. Check that out. It's a no money down property seminar where you can learn the tricks of the trade, how to get into property without using your own money, how to use strategies that don't require you to actually buy the property. You can control the property and make money from property and build a business around property without necessarily having big deposits for buy-to-let properties. So have a look at that at the bottom of the page. So thanks for listening. I'm going to go and cool down now. It's still very humid here in London. So wherever you are, have a great evening, and thanks for listening. Thank you very much. And thanks for Gemma there on Facebook Live, and Victoria. Great to see you there again, and hope you're well. Thanks a lot, and good night.